If you're an investor of any kind and you're not yet invested in cryptocurrency, what are you waiting for? Top 5 reasons you must invest in cryptocurrency. Hello, welcome to Crypto Countdown. My name is Fu, and today we're looking at the top 5 reasons you need to invest in cryptocurrency right now. Now, before we begin, I am not your financial advisor, and please like, subscribe, and hit that notification bell so I can bring you more top 5. Alright, let's get on it. Number 5, Volatility The Opportunity for Insane Growth. Now, volatility is often seen as a negative term, but I want to impress upon you that it is just the opposite. In fact, volatility is what makes cryptocurrency so incredibly lucrative. Now, if there wasn't any volatility, then there really would be no gains. If you don't want volatility, put your money into an index fund, take your 5 to 8% returns every single year, and call it a day. But that is not the way to grow wealth. That might be a way to maintain your wealth, but if you want to see your money grow, then there is no better market than the crypto markets. Let's take a look at why the crypto markets are so volatile. And there are a few key reasons. Now, one of the biggest reasons is that cryptocurrency and Bitcoin are still really early on, and there are still so many gains to be made. And so when a market is that nascent and that new, we are still in that price discovery phase for every single cryptocurrency in the market. But as more and more investors get into the space, and especially as institutions get into the space, we're going to see a lot more stability and a lot less volatility. But at the same time, that's when we're going to see the gains kind of subside. You're not going to see as many 100x, 1000x, 10,000x, sometimes 100,000x gains. You're going to see much smaller gains as the market matures, similar to what you see with the stock market. So what I'm saying is there is no better time than right now and in the next few years to take advantage of this brand new marketplace. Because honestly, it's like buying real estate in Manhattan in the 1840s. Now, the second reason crypto is so volatile is because it is decentralized. There is not a centralized entity that's controlling it. It's really governed by market forces, which can be a beautiful thing. Not to mention the fact that coins like Bitcoin have a very limited supply. In Bitcoin's case, it's 21 million, and that's it. For a lot of other coins, it varies. For example, Dogecoin has an infinite amount of coins, but they're limited to minting 5 billion per year. And for projects like Ethereum, right now, it's currently an infinite supply, but EIP 1559 will actually make Ethereum deflationary, limiting its supply. And lastly, one of the big reasons that crypto is so volatile is because there are so many speculators and so many traders that are trading on leverage. And a lot of times, whales love to liquidate those leverage positions, and that equates to a lot of dramatic sell-offs that you don't necessarily see in other markets. Now, I would definitely advise against leverage trading. The surest way to make money in crypto is to buy great projects and hodl, or take small profits as they come. Take a conservative approach and you're gonna make a lot of money in this industry. Now, I just wanna take a peek at the Bitcoin chart, since Bitcoin is the barometer of the entire crypto market. And the crypto markets, at least as of right now, it kind of goes wherever Bitcoin goes. So now if we take a look at the overall Bitcoin chart, you can see that it does have dramatic peaks and dramatic drops. And that's okay, because what we're seeing is that we are constantly getting higher lows. Meaning, even when we have dips, the lows are getting higher and higher, which means there's a general trend upwards on the price. And that's a great thing. So if you buy great projects and you hold on to them, you will make money. Crypto is a long game. And not financial advice, but what I do is I never invest anything more than I'm prepared to completely lose. Even though I know I'm not going to lose that money, I know that I'm going to get a great return on that money and that it's almost guaranteed, even though nothing's guaranteed, but it's as close to guaranteed as possible. We will make a great return on crypto. It's been shown throughout the entire decade that it's been around. So again, buy great projects, hold on to them. If you know you're the type of investor that's tempted to sell as soon as there's a dip, don't even look at the price. Buy great projects, hold on to them. Look at them in 4 years if you need to. Number 4. Small investments are more than enough. So how much money should you invest in crypto anyway? Because of its volatility, you can invest very little and still make terrific life-changing gains on this asset. How much should you invest? Well, let's take a look. Now let's look at the charts for one of my all-time favorite projects. That's Cardano. And Cardano, what's amazing about it is it has an almost $45 billion valuation and it doesn't have a working product yet. Now, of course, it's gotten a lot of criticism for this. It's been called vaporware. I think that investors are smart to invest in potential. I mean, that's what we do. Great investors invest when it's still early, when a project hasn't proven itself yet. I mean, who wants to invest after something has blown up? What type of gains are you going to make investing in Amazon today as opposed to in 2005? But it was a much more volatile asset in 2005. I mean, would you agree with that? So even though Cardano hasn't done anything yet, as an investor, it has almost everything that you look for, from an amazing team to amazing code to a great community, great leadership, and an incredible vision for the future. You also have a lot of projects that are chomping at the bit to build on Cardano. So these are all really great things that I look for as an investor. So let's take a look at the charts for Cardano. And as you can see, Cardano, as with every other project, has absolutely exploded during this bull market. But what if you invested just 1 year ago when it was trading at about 8 cents? Well, we can see that Cardano's price now is at $1.40. And it hit its all-time high of $2.45 about a month ago, May 16th. It hit its high, all-time high of $2.45. So if you had purchased Cardano 1 year ago at 8 cents, you would have 30x'd your money on May 16th at the all-time high. Now, obviously, it's come down a little bit, but it's still at $1.40. So at its all-time high, if you bought 1 year ago, you would have made a 30x on your investment. Now, let's say you invested $100. Your money would now be worth $3,000. That's a pretty damn good return. Let's say you put in $1,000. Well, your investment would have been worth $30,000 when Cardano reached its all-time high in less than a year. What about $10,000? If you put in $10,000 a year ago, that investment would be worth $300,000 at the peak. Now let's take a look at Ethereum in that same time period. So on June 19th, Ethereum was at $228.96. At the peak of this bull market, Ethereum reached $4,356.99. Now again, that's about a 20x. That's a little bit less than Cardano, but still pretty amazing. But now let's go back 5 years, because I think 5 years is the magic number as far as the amount of time it'll take for just a regular retail investor to make life-changing gains in crypto. Let's go back 5 years and take a look at how far Ethereum has come. So if you bought Ethereum on June 25th of 2016, you bought it at $13.85. Now at its peak of $4,357, that is a 300x return on your investment in just 5 years. That is really unheard of in any other market, and yet it's commonplace in cryptocurrency. It happens all the time, and 300x is actually considered fairly small. Now, just for shits and giggles, let's take a look at the Dogecoin chart. Now, Doge has been down just like every other coin, but it reached a high of 73 cents in May. Now, if you had bought Doge in that same period 5 years ago, you would have paid 0.0003 cents for it, and your return would have been a 2000x. Your $100 investment back in 2016 would have been worth $200,000 to $300,000. Now, these gains seem almost ridiculous, but they are commonplace in cryptocurrency, and again, it's due to the volatility that we just talked about. But we will see gains like this again in the coming years. There's no question about it. The only question is, can we identify the projects early enough and take advantage? Because I'm pretty confident in saying that the Amazon, the Netflix, the Apple of blockchain don't yet exist. Number 3, DeFi. Now, DeFi stands for decentralized finance, and it's currently the largest and most important sector in all of cryptocurrency. What DeFi allows you to do is everything that your bank allows you to do, but without the bullshit. You can earn interest, borrow, lend, buy insurance, trade derivatives, trade assets. You can do everything. But it's faster, you don't require paperwork, you don't have to be approved for anything, and you can even remain completely anonymous. Can you imagine getting a loan for a home or a car with DeFi? Now, we're not there yet, but that will be a possibility. They won't have to do any credit checks, they don't even have to know your identity. That's pretty amazing. Now, this is so important because it opens up the financial markets to anybody with an internet connection. It's fair, free, and open. And we're seeing all of those things start to play out today. People are using DeFi to lend money and get incredible rewards from it, incredible interest payments from it. Take a look at Voyager. Voyager is a very popular centralized exchange, and you can keep your crypto on Voyager and earn interest. And take a look at this interest. You can earn 9% for USDC, 6.25% for Bitcoin, Ethereum's at 5.25%, Polkadot's at 8%, Voyager itself is at 7%, Cardano is at 5.25%. Now this right here is huge. USDC is basically the equivalent of the US dollar. It is pegged to USD, it's basically 1-to-1. If you kept your money in a bank, the average APR is 0.04%. Just think about that. 0.04% is the average APR in a savings account. If you stored your money as USDC, as cryptocurrency, your APR would be 9%. So let's crunch the numbers a little bit. If you stored $100,000 in a savings account, every year you would get an interest payment of $40. Now let's say you put that same $100 into USDC, well, you would get paid out $9,000. $9,000 or $40. Now, one of the reasons the interest rates are so high in DeFi right now is because there aren't that many people doing it. However, even when it gets a critical mass, it will still be substantially larger than 0.04%. Now, you can't tell me this isn't going to absolutely change the banking industry as we know it. It absolutely will. Other things that you can do with DeFi right now: getting a loan. Obtain a loan instantly without filing paperwork, including flash loans that traditional financial institutions don't even offer. What's great about this is, let's say you bought Bitcoin back in 2013 and you have $500,000 worth of Bitcoin right now. And you don't want to sell it because you think Bitcoin is going to go to $500,000 or even $1 million per coin. Well, the good news is you can borrow against your Bitcoin. You don't have to sell it in order to have liquid and be able to spend that money in real life. You can borrow against that Bitcoin, and the best part about it is that money is considered a loan and you're not even on the hook for capital gains taxes. Now that is all beyond the scope of this video, but the potential is massive. Now, in addition to saving and earning interest that way, you can also lend your crypto and earn interest in that way as rewards for lending your money on platforms like BlockFi. Now again, this is very cool because you don't have to sell your crypto in order to profit from your investment. And of course, you can always make peer-to-peer trades without the problem of a middleman being involved. And lastly, of course, you can trade derivatives as you would stock options or futures contracts, if you're into that. Number 2, Fiat's hyperinflation. So this year, we've seen the US dollar have massive inflation, the most since 2008, since the financial crisis. Now, a lot of that does have to do with the pandemic and the incessant printing of money. But the value of the dollar has been slipping for a long time now, and there are no indications that it's going to stop. In this article, Citigroup, one of the largest multinational investment banks in the US, believes that the dollar could lose another 20% of its value next year, on top of the 5% that it's already lost this year. And in fact, that 5% is more than 2 times higher than what the Fed is aspiring to keep our inflation rate at. They want to keep it at about 2%, but it was 5% last year. And the dollar is constantly losing its value, falling 10 to 12% relative to our major trading partners and dropping to its weakest level since 2008. And a lot of experts are predicting a 35% decline in the value of the dollar by the end of 2021. So things are not looking good for fiat. Now, we already know that Bitcoin was created at the height of the financial crisis as a hedge against the evils of centralized finance. And we're seeing more and more that Bitcoin in particular is being used as a hedge against inflation, much more than assets like gold. And if we take a look at a dollar invested in Bitcoin versus gold over the last 12 years, you can see the astronomical difference between the two assets. 11 years ago, if you put $1 into gold, that dollar would be worth $1.41 right now. If you put that same dollar into Bitcoin, that dollar would be worth over $7.1 million right now. Absolutely insane. Even if you invested just 1 year ago and put that same dollar into Bitcoin versus gold 1 year ago today, that dollar in gold would be worth $1.03. But in Bitcoin, it would be worth more than 3 times, almost 4 times more, at $3.79. So we know that people are hedging against inflation by putting their money into other assets. Gold is one of those assets, but Bitcoin makes a lot more sense to me. And the dollar itself, well, it will continue to depreciate with its buying power decimated year after year. Take a look at this chart. What you could buy in 1913 for $100 is going to cost you over $2,500 to buy the same exact things now. And a lot of that has to do with the amount of money that is being printed. The government pretty much prints as much money as they want, whereas assets like Bitcoin have a fixed supply of 21 million, making it highly deflationary. And beyond that, Bitcoin has increased in value by over 200% on average throughout its entire 12-year existence. And with Bitcoin getting more and more scarce, that value increase isn't stopping anytime soon. So let me ask you, what do you think is going to hold its value better? The US dollar or Bitcoin? Number 1, we're super early on life-changing technology. Now, I want you to take a look at something real quick. This is the cryptocurrency total market cap. And we have a total crypto market cap right now of 1.5 trillion. It was over 2 trillion for a little while, for like a minute. And then now it's settled at right around 1.5 trillion, which is still significantly higher than it was in the last bull market and even just 6-7 months ago. I mean, a year ago today, the market cap for the entire crypto markets was 276 billion. I mean, so we've almost 6x'd our entire market cap from a year ago. That is incredible growth. So 1.5 trillion is the total cryptocurrency market cap. Let me show you something else. Take a look at this right here. The entire market cap for the world's global stock market value is $95 trillion. Now that $95 trillion accounts for the stocks of roughly 630,000 global companies. Now, of those 630,000 publicly traded companies, how many do you think actually have Bitcoin or cryptocurrency on its balance sheet? 42. 42 publicly traded companies out of 630 publicly traded companies worldwide have Bitcoin or cryptocurrency on its balance sheet. Think about the potential for growth here. Do you think that in 10 years there are going to be more than 42 publicly traded companies with cryptocurrency on its balance sheet, or do you think it's going to be less? Now let's look at something else. We haven't even talked about the global real estate market yet. That in and of itself is another $9 to $10 trillion. And blockchain hasn't even touched that yet. Blockchain technology would make real estate transactions so much less complicated and so much safer. But again, that's beyond the scope of this video. Maybe I'll make a separate video about the ways blockchain technology will absolutely revolutionize real estate. And then we have to look at what cryptocurrency and what blockchain technology is going to do for gaming and for meta worlds like Decentraland and virtual reality and augmented reality. We haven't even scratched the surface of that. Even now, you can go to actual concerts in Decentraland. You can get a job in Decentraland and get paid out in mana. I'm talking about a real job. You can actually get hired in Decentraland. You can buy real estate in Decentraland. As a matter of fact, there's virtual real estate that's being purchased as we speak on Decentraland. There was just one estate that was purchased a couple of days ago for just over $900,000. Investing in digital real estate has become massive business. And what about tracing our entire health history just by scanning a code on our cell phone? Or being able to trace a product from its absolute inception to the dinner table? Or to fight counterfeiting by tracing an Hermes Birkin bag from the craftsman to the store and then to your hands? What about making sure that the diamond ring that you buy is conflict free? All of these things will be possible. Projects like VeChain are working on that problem right now as we speak. So we are already seeing blockchain starting to change the fabric of our society, and it's only going to escalate from here. And the great news is we are absolutely on the ground floor. We are in the first inning right now, and it may not be the first batter like it was in 2017 or the first pitch like it was back in 2012 from 2010, but we're still in the first inning. The game has barely started, and if you're watching this, you're already way ahead of the game. Now, you may not yet have invested in crypto, but the fact that you've watched this video all the way through to the end tells me that you understand the immense potential of this space. And as investors, we want to get in early. And right now, what we're doing is essentially buying real estate in Manhattan in the 19th century. That's where you are right now. That's the opportunity before you right now. What you do with that opportunity is completely up to you. That's all I have for now. Please like, subscribe, hit that notification bell. Let me know what you think in the comment section below. If you agree with me, if you disagree with me, if you think I'm fucking crazy, let's discuss it. Leave a comment below, and I'll have another video for you next week.
Hip-hop's got me stuck from the hands and beat up. The mic's been cracked and I'm attracted ever since I came past it. Grabbing hits with action kept me laughing straight through the sadness. One love for hip-hop, one love for the